So I'm going to go ahead and get us started this morning. First, welcome back to day 2 of ESSA Academy. We are so glad that you have joined us this morning and that you came back from yesterday. So thank you so much for that. We have a couple of quick housekeeping items, same as yesterday, but we do ask that just to reduce distractions, that you do a couple of things. If you could please mute your computer and or phones during the presentation, that would be very helpful. Go ahead and turn your camera function off. This also helps to eliminate distractions, but also helps with some bandwidth issues. So if you could turn that off, and then you have entered the meeting muted. So if you have any questions for us at any time during the presentations that you hear, please feel free to drop them into the chat box. And we do have a couple of folks who are monitoring the chat, and we'll be sure that you get your questions answered. So again, thank you so much for coming back this morning. We are very excited to host the ESSA Academy this year. My name is Sarah Longshore. I am the proud director, or have been serving as the proud director in the Office of Federal and State Accountability since July 2019. And we have been, again, very excited to host the ESSA Academy. For those of you who have been around for a while, you may have remembered our rules and regs annual meeting that we had each year, and we have evolved. I'm so excited that this year we have kind of changed our focus a little bit. We realize certainly that Title I does not exist in a vacuum, that there are lots of programs under ESSA, lots of offices in our agency touch these different grants, as well as offices within your own LEA. And so we have really tried to broaden our focus with the ESSA Academy, rather than focusing primarily on Title I, although it was not always on Title I only exclusively. We've really tried to broaden the focus, and have tried to collaborate with other offices to present information that we thought would be helpful to you as you administer and manage your federal programs. Two of the offices that we have collaborated with, you will hear from this morning. One of them is from the Office of Finance, and then also the Office of Auditing Services. But we are, again, just so excited about ESSA Academy, and I have to thank the Assistant Director of the Office of Federal and State Accountability, Jewel Stanley. This has certainly been her vision, and I just wanted to publicly thank her for her planning and for her vision, and for everything that she has put into making this a reality for us. I also wanted to publicly thank Eric Brunson. He's our IT guy, our IT specialist. He's behind the scenes making sure that our technology is working and that we're organized and know what to do. So Eric, thank you to you. There are a lot of folks in our office who have been working together and who have come together to put this event on for you. We hope that it has been worthwhile. We hope that yesterday was informative for you, and we hope that it proved to be a good use of your time, as we hope that today will be as well. So we have a general session here for you this morning. You'll hear from a couple of folks. The first is going to be Stephen Strother. He is the Finance Director here at the South Carolina Department of Education. And then you will hear from Melissa Myers, who is the Director of Auditing Services. After that, Jewel and I will present some updates from the Office of Federal and State Accountability. On the agenda, we have us blocked out for 3 hours. I'm doubtful we will take up an entire 3 hours, but we decided not to worry about that too much. Most people are not terribly upset when they get a little bit of time back to their day. So we may finish up a little bit before 12 o'clock. So if you have a little bit of time to work on some other projects, deal with other issues that have come up that you need to deal with, that would be an excellent time to do it. But please don't get so caught up in your work that you don't join us back for the breakout sessions this afternoon. We've got some really great ones planned for you. So again, welcome. Thank you so much for being here this morning. And I am going to, at this time, stop sharing my screen, and I'm going to turn it over to Stephen Strother, our Finance Director. Stephen?
Thank you, Sarah, very much. I appreciate it, and good morning and welcome to the ESSA Academy session for finance updates. I am Stephen Strother, the Finance Director for the State Department of Education, and I have with me today from the South Carolina Department of Education Finance Office, Daniel Haven of Fiscal Practices, Sequoia Williams of Grants Accounting, and Melanie Cooper, Financial Services. They are here for your questions as well, and also to reach out to at any point in time that you may have questions or need assistance at any point in time. And hopefully everyone can see the PowerPoint there in front of us today, and hopefully everyone can hear me. But we will get started with the finance update portion of the presentation. So essentially, we will go back through some housekeeping information that Sarah initially talked about to reduce distractions. We just encourage you to make sure that your computer and or phones are turned off during the presentation. The camera function should be turned off as well. Please type your questions in the chat box. If you think of questions as we are going through the session, please type them in the chat box, and at the conclusion of the session, we will attempt to answer the questions in the chat first. And also, I believe that we have a function that we can unmute you at the end of the session so that you will be able to answer questions or get clarification on some of the questions that we have already answered, and ask any follow-up questions that you may have. So essentially what we're going to talk about today is South Carolina Department of Education grants accounting and GAAPS, and also the statewide program on district fiscal practices and budgetary conditions. And again, we will have a portion where we will answer some questions. First of all, in GAAPS, there are some role descriptions that you want to pay attention to when you are in GAAPS. 3 roles are needed in GAAPS. First of all, there is a grant coordinator role, and that person enters budgets and budget amendments, okay? And then there is a subrecipient finance role. That person approves budgets, amendments, and enters claims. And there's also a finance approver who approves claims, and we'll talk a little bit about each of those roles. But your district's web access coordinator, which is the same person who granted you access to GAAPS for your district, will be able to assign these roles for you in GAAPS. So a little bit about the grant coordinator role. Essentially, this will be your grant coordinator. Typically, it's a program person, maybe your Title I or Title II coordinator, etc. It can be many people who will enter the budget and GAAPS, and they will also, for title programs, enter the budget and GEMS. When entering the budget, the person will enter a description of the activity being budgeted, and they will want to be very descriptive. If the activity is for in-classroom instruction, they will want to make sure that they describe the function of being in classroom. This is for kids, this is for students, this is for instruction. Make sure they make that distinction when you, the finance person, actually sees these budgets and these descriptions. If the activity is for students taking a field trip, they will want to make sure that description is entered as well. So once your grant coordinator enters the budget as well as the description portion, they will route that budget to the subrecipient finance. Now, the subrecipient finance role will most likely be someone in the finance team, and part of that role will be to approve the budget submitted by the grants coordinator. They will want to pay attention to descriptions, and that the descriptions correspond to the correct function and object codes that we see in the Grants Accounting Handbook. They should also make sure GAAPS matches GEMS for the title projects, and the subrecipient finance should be familiar with the correct function object designations as described in the accounting handbook. They should scrutinize the budget before approving that budget. So this should not be a blind approval of a budget that has been entered by your grant coordinator. They should scrutinize the budget. They should go through each of the descriptions to make sure the descriptions are accurate and make sure that they correspond to the correct function object code. If a budget is not correct, if the subrecipient finance sees that the budget is not correct, that subrecipient finance can return the budget to the coordinator for correction. And we want to make sure these budgets are correct before they come to the State Department for approval on the district side. So keep that in mind. So the subrecipient finance, other than approving budgets, is also responsible for entering expenditure claims and gaps. And part of that role is to assure your budget matches gaps and GEMS. If you have an accounting program there at your district, make sure that budget matches your gaps and GEMS budget. So there are no discrepancies. If they don't match, then you take a chance of under claiming or under expending a certain function or some certain object. Assure your program coordinator is approving expenditures prior to the payment. In other words, what I mean by this is that if you have a check request function there at your district, that your check requests are approved by your coordinator persons to show that this is allowable in this program, or the coordinator should also be approving your requisitions and purchase orders prior to them coming to finance to be paid or approved. So your coordinator serves that function as well. Assure that the appropriate personnel are being paid from the grant. Make sure that you're running through Title I, you don't have last year's Title I personnel running through your grant. Because when you get ready to claim that, then you're essentially claiming, you're not claiming correctly if you have wrong people in that grant. So keep that in mind, and that is the function of your subrecipient finance, to make sure that goes well in coordination with your grant coordinator. All that should be done prior to claiming the funds. So make sure that you are in agreement with your grant coordinator that the appropriate personnel are being paid from your grant, and that everything that has come through for payment has their signature on it prior to you paying those things. Once they appear on your ledger and they are correct, you can be assured that you are most likely claiming the right items. Okay. Once those things are done, the claim can be entered. Okay, and then it can be submitted to the finance approver. So the subrecipient finance submits the claim to the finance approver. At that point, the finance approver will approve the claim. Have the subrecipient finance person share their spreadsheets, ledger printouts, and any other backup that they may have, any other documentation, with the approver. And that way, they're not, blindly approving federal claims. Double check to make sure that the claim has been submitted to SCDE Finance. So your finance approver has that role to make sure that that has been submitted to finance, the grants accounting section, for approval. Don't let it just hang out there in limbo. Make sure that it has been submitted. So those are your three roles that are needed in GAPS. And again, your web access coordinator at the district can set those roles up for you. If you have some issues, you're welcome to call the grants accounting section or me, and we will get you squared away. So essentially, check your roles and gaps. You need to assure that you have someone to enter the claim, the subrecipient finance role, and someone to approve the claim, the finance approver. What we mean by that is we want separation of duties. We don't want someone logging in as the subrecipient finance and entering the claim, and then logging out and logging back in as a finance approver and approving the claim. Just not good separation of duties. It's just not good practice. There are many reasons for separation of duties, and one of those reasons, one of the simplest reasons, is to prevent mistakes. More eyes on something, you have a much better chance of catching mistakes if you have those separation of duties. So make sure that the approver and the subrecipient finance person is not the same person. Make sure you have someone else in your finance office that can serve those roles. And also, again, make sure that your claims have been submitted to SCDE Finance. Make sure that they have gone and you're going to get paid for those claims. Now let's talk a little bit about budget amendments. Okay. Budget amendments must be submitted prior to expenditures being obligated. And I'll tell you a little bit about what that means in a second. But federal regulations state that expenditures must be approved prior to the obligation. But also note on this slide that the general deadline for budget amendments is about 3 weeks prior to the end of the expenditure period, unless noted differently in the GAN. So pay attention to your GAN. But what that means is if your expenditure period ends on 6/30, then you can go back about 3 weeks and know that your claims, your amendment deadline is about 3 weeks prior to that. Simply get amendments approved at the state level prior to moving budgets at the district level. Okay, so you don't want to move your budget at the district level and allow expenditures in an unapproved budget, assuming that the amendment will be approved at the state level, to find out later that, we did not approve them. So don't move your district level budgets first. Make sure you get your amendments approved at the State Department level prior to you moving your budgets around at the state level. It just prevents a lot of things. If you move your budget around at the local level, at the school district level, prior to you getting that amendment approved, you take a chance of an expenditure being approved and going through being paid, and then you are violating guidelines and you chance losing those funds because that amendment may not be approved. So again, be very, very careful to follow those guidelines. Make sure that you get your amendments approved through the State Department of Education prior to allowing someone to expend those funds at the district level. Let's talk a little bit about claims deadlines, okay? Essentially, your claim deadlines for Q1, your claims are due by November the 15th, Q2 by February the 15th, Q3 by May the 15th, and Q4 by August the 15th. You will recognize that deadline. These deadlines are 45 days after the end of the fiscal quarter. So when your quarter ends on September the 30th, you have until November the 15th to make that claim. When your quarter ends on December the 31st, you have until February the 15th to make that claim. Quarter ending on March 31st, you have until May the 15th to make that claim. And finally, expenditures that go through June the 30th, including accruals, you have until August the 15th to make those claims. So important deadlines there, but always remember that for federal claims, they are 45 days past the end of the fiscal quarter. So your final claim submission deadline, of course, is an important deadline to remember. Essentially, we just talked about it, but expenditures that go through June 30th, your deadline will always be August the 15th for federal awards of the same year, regardless of the award period of the grant and or the day that the 15th falls on. So just know that that deadline is the 15th. That's your 45 days after the close of the year. Of course, at the end of the year, you have accruals that you're trying to square away for the fiscal year. You have invoices that are coming in that you want to accrue back to the prior fiscal year. You have payroll that you're trying to accrue as well. So just be cognizant of that. Set deadlines. Make sure that your accounts payable deadlines are set early enough to allow you to get invoices in and pay those invoices well in advance of the August 15th deadline, so you can cut your accrual flag off. Now, there are some districts that are consolidating. So if you are a consolidating district, as of right now, unless we put out further guidance to you, these are some of the things that you want to remember. Again, accrue salaries and accounts payable. Claim funds by the August 15th deadline. Complete your audit by the December the 1st deadline, earlier if possible. So essentially, if you're consolidating, again, set the accounts payable deadline early. In other words, allow your people to place their final orders early on in the year. And now, honestly, it's about time. We're at the close to the end of March. You should be putting a deadline on any more orders at this point in time. That allows your items to come in, allows you time to get your invoices, and allows you time to make those claims. Do your accrual payrolls as early as possible after the close of the year. Some programs allow you to go ahead and enter those accrual payrolls so that they will appear on ledger. And so do that to make sure that when you make those claims on August the 15th, that you are claiming everything that can possibly fit into those federal programs. Be ready to claim, make your final claims by August the 15th, and that deadline should be the very, very latest that you're making those claims. And your audits will be submitted by December the 1st or earlier, if at all possible. Some of you have asked about a new grants management platform. Yes, there is one on the horizon. It's out there on the horizon. I can't tell you exactly where it is on the horizon, but it is coming. And it will merge the functionality of GAPS and GEMS. So by combining the functionality, we will eliminate any of the issues that you might have experienced with the two systems, possibly GEMS not matching GAPS. We're looking at a much more efficient and effective way to enter these budgets and to follow what is going on within the federal award. So that is coming. So please be aware that that merging of the two systems is coming. If you find that you are having issues with GAPS, contact the Grants Accounting Office. They're available for you for technical assistance. Essentially, what we want you to do is explain your issue and send some screenshots if you have some available. And send those issues to Grants Accounting at the Grants Accounting email address, which is grantsaccounting@ed.sc.gov. Some of the issues that you may experience, I've experienced them myself. Your coordinator can't submit an amendment. For some reason, they are stuck and just cannot submit that amendment. Why can't I submit that amendment? Have them make a screenshot, email it to us, and we may be able to, find out what's going on fairly easily. You may find that you can't approve a claim or approve a budget amendment. Make a screenshot, email it to us. And also keep in mind with GAPS, there are training tools available. And the way you find those is you go to the finance page, go to finance, and then find Grants Accounting, and then find GAPS. And you will find your training tools there. There are some videos. There are a lot of different helpful tools there that we don't have time to cover in these slides today, but just know that those GAPS training tools are there for your help, and please utilize them. So we will move on to the Grants Accounting staff listing. If you want to know who handles your federal award, that information is available on our website as well. You may want to contact that person personally. If you don't want to contact them through the Grants Accounting email address, in order to find out who's handling your grant for you, your award for you, go to the website, go to Find Finance, and then Grants Accounting, and there is a Grants Accounting assignment listing. And under that listing, you will find email addresses and phone numbers for the person who handles or who is handling a specific federal award for you. So please find that there, and they're more than willing to help you through any issues that you may be having. So we move on to the statewide program on fiscal practices, and we'll give you an update on that. In 2017, May 9th, McMaster approved Act 23, which directs the Department of Education to develop and adopt a statewide program on fiscal practices and budgetary conditions. So that's where fiscal practices came from. The State Department of Education shall work with district superintendents and finance officers to develop and adopt a statewide program with guidelines for identifying fiscal practices and budgetary conditions that, if uncorrected, could compromise the fiscal integrity of a school district, and also advising a district identified to take appropriate corrective actions. So that's what our fiscal practices section is here for. There are escalating levels of concern. We begin with fiscal watch, which is the lowest level of concern. There's also a fiscal caution, an intermediate level of concern, and a fiscal emergency designation, which is, of course, the most severe level of concern in fiscal practices. Each level requires the district to develop and submit a fiscal recovery plan to the South Carolina Department of Education. So please remember that if you are under declaration, each level or any level requires that fiscal recovery plan to be submitted. Each level allows the local board to appeal a declaration of the level of concern to the State Board of Education. Also remember, while we are on this slide, that while a district is under fiscal caution, the State Department of Education may order a performance audit of the district at the department's expense, and later may require full reimbursement from the district. So keep that in mind, that we may order a performance audit on any district that is under caution. While a district is under fiscal emergency, the state superintendent may make a recommendation to the State Board of Education that the department take over financial operations of the district for the fiscal year as part of the technical assistance that we are offering to that district. So we can actually go in and take over financial operations of a district under emergency. So keep that in mind as well. And that would be considered part of our technical assistance. Technical assistance, the State Department of Education provides any technical assistance in implementing proposals and making recommendations at every level of declaration. We may also do site visits and inspections. We are required to visit and inspect districts under fiscal caution and fiscal emergency. So if your district is under one of those declarations, caution or emergency, then the State Department will visit and inspect those districts. So as a summary, what's been going on with fiscal practices? After the 19 audits, after the FY19 audits, we have had 11 districts on declaration. And 5 of those districts were on watch, 4 on caution status, and 2 on emergency status. You may wonder what the primary factors for declaration are. 2 of those districts were for non-compliance of the minimum fund balance requirement, and I'll talk a little bit more about that in a second. 6 were for repeat audit findings. 2 districts turned in audits that were more than 60 days late, and 1 district had high risk factors. So let's go back to the non-compliance of minimum fund balance requirement really quickly. Basically, if you want to figure out how to calculate that, you take your prior 2 years, the current audited year and the audited year just prior to that of your operating expenditures, okay? And you come up with an average. So you take those 2 years and you divide it by 2. What you're looking for is 1 month expenditure, minimum of 1 month expenditure balance. And the factor there is simply 1 divided by 12, which you come up with a factor of 0.0833. So your 1 month operating fund balance should be at least your 2-year average times 0.0833. That would be your 1 month benchmark that you're trying to meet. And if you're more than that 1 month benchmark, to calculate how many months fund balance you have, take your fund balance and divide it by your 2-year average times 0.0833 to get your number of months of operating balance that you currently have. So that's what that means, and that is unrestricted fund balance as well. So that's kind of an example of where that non-compliance of minimum fund balance comes from. Currently, the current status of the FY20 audits, we have, we'll be reviewing audits during March of 2021. Districts will be put on fiscal declaration for submitting after March 30th, 2021, because if you remember, we extended that audit deadline to January the 29th. So March the 30th, 2021 is 60 days after that extended deadline. Also keep in mind while we're on this slide, a district on declaration cannot be removed from declaration in the same fiscal year in which the declaration was made. So please keep that in mind. Currently, we have 3 audit reports outstanding. Districts will be informed by the department by April of 2021 if they will be placed on declaration, if they have a declaration status continued, or if their declaration status will be removed. So districts will be notified in April of any of those 3 things. Please also remember that if a district is placed on declaration for a 4th consecutive year, if it goes into a 4th year of declaration, the department will assign an emergency declaration regardless of the previous level. It doesn't matter if it's watch, caution. If you go into a 4th level of declaration, you will be assigned the emergency declaration. So essentially, to finish up with fiscal practices, risk mitigation, how do you prevent these things from happening? Essentially, adhere to all funding requirements, look at your funding manual, terms and conditions and assurances of your federal awards, look at your contracts, comply with state, federal laws, policies, and regulations, remember your board policy, remember your financial procedures, your purchasing procedures, and also your procurement guidelines. Adhere to performance expectations. In other words, know your awards, know your projects, know your grants, and know your funds, and know what is required from those awards. Meet all of your reporting requirements. Make sure your reports are complete and on time. Make sure deadlines are met. Maintain a well-designed and tested system of internal controls. Examine your operations to determine vulnerabilities of your internal controls. Implement fraud prevention strategies, ensure appropriate separation of duties, identify potential conflicts of interest. Ethics, no less than arm's length transactions in your procurement and your purchasing programs. Ensure all financial reports and other certifications are adequately supported with documentation and evidence. Follow a fair and transparent procurement process. Make sure everything is done correctly in your procurement process. So with that, to find other information on fiscal practices here at the State Department, the guidance can be found under Finance, Financial Services, and then you'll see Manuals, Handbooks, and Guidance. And under Manuals, Handbooks, and Guidance, you'll find Fiscal Practices Guidance. So become familiar with that, and make sure that others in your district are familiar with it. And with those mitigating factors, then you should be on a good path if you follow those directives. And with that, that concludes the finance update portion of the presentation. Are there any questions?
Stephen, there were a couple of questions in the chat, and most of them have already been answered. But there was one at the very beginning that I didn't see get an answer, and that was a question about, this was very early in your presentation when you were on the first slide about the different roles, and it was asked, does it need to be a physical signature, or can there be an electronic approval?
As long as it's approved by your coordinator, it can be an electronic approval. As long as you have evidence of that approval, it can be. And what I normally recommend is, if you have a portal that you're approving, purchase orders or requisitions from, make sure you see that. Make sure you see that electronic signature. Make sure you see that physical signature before you make that approval. So, whatever that routing system may be, make sure it comes to you and you physically put your eyes on that approval, whether it's electronic or whether it's physical. That's what I recommend.
Thank you, Stephen. And I would just add to that and reiterate what I heard Tiffany from Brustein and Manasevit say yesterday, is to ensure that whatever procedures the district has decided to use, that it is documented in the district's policies and procedures. So if the district has decided that they're going to handle a certain situation a certain way, they need to have that documented and follow their own rules, correct?
That is correct, definitely. Documentation, make sure you're following the rules. Make sure everyone is aware of those rules in the district.
All right, are there any other questions? There were a couple of other questions in here. Let's see, we've just got one. Fund balance formula, caught most of it, but do you have it written?
I do. I have it written, of course, in front of me, and I have it, I have it documented from when I was at a district, but I can certainly share that if you want to email me and ask for that formula, sgstrother@sc.gov, or whatever the rest of that email address is.
Okay,
So,
great.
if you want that formula, please email me. It's SG Strother here at the State Department.
All right.
I think I even have some examples with that.
Great. Looks like the other questions have been answered. We'll pause for one more moment and see if any other questions pop into the chat. Stephen, this has been very informative. Thank you so much for presenting. It was just asked if you could give your email again one more time.
Sure, if I can remember it. It says sgstrother, STROTHER, @ed.sc.gov. I did better that time.
Yeah.
So let me do that one more time. SG Strother, and Strother is spelled STROTHER, @ed.sc.gov.
Great. Got it. Well, thank you so much, Stephen. We really appreciate you taking time out of your day this morning to talk with all of us. And so thank you for sharing your time and your expertise with all of us. Really great information, and we appreciate you being here this morning.
Very much. Thank you.
Thank you. So at this time, I'm now going to turn it over to Melissa Myers, who is our Director of Auditing Services. And after Melissa speaks to us this morning, we will take a quick 10-minute break before Jewel and I pick back up. So at this time, Melissa, I see you got your camera on, and I see your slides. All right, everybody, Melissa Myers.
Thank you, Sarah. Good morning, everyone. As Sarah already stated, I am Melissa Myers. I'm the Director of the Office of Auditing Services here at the State Department of Education, and I'm here today to share some valuable information with you. Our outline for today: first, I will discuss some required written procedures under 2 CFR Part 200, which are our federal guidelines. We will then discuss adequate supporting documentation. I will give you a list of some common audit findings, discuss our subrecipient risk assessment process, indirect costs, and then provide you with some SCDE resources. So what is 2 CFR Part 200? Yesterday, the Brustein team spoke a lot about the UGG, so I'm going to just kind of ditto a lot of what they already said. But the 2 CFR Part 200 is the Uniform Administrative Requirements cost principles, and audit requirements for federal awards. You will hear this document commonly referred to as the UGG, or the Uniform Grant Guidance. Previously, there were separate federal regulations for nonprofit entities, for state agencies, and some years ago, all were consolidated into this one document called 2 CFR Part 200, which is why it's called the Uniform Grant Guidance. One thing that's stated in this Uniform Grant Guidance is that non-federal entities expending $750,000 or more in federal funds are required to have a single audit. Most school districts already meet this this threshold every year, but that is one thing that's stated in Uniform Grant Guidance. The Uniform Grant Guidance also states several procedures are being necessary, being required for school districts or other non-federal entities. One required procedure is districts must have written procedures for determining the allowability of cost in accordance with federal cost principles and the terms and conditions of the federal award. We know that most or all grants have specific allowability requirements. So you should have in your written financial procedures the steps that you take to ensure that costs that you are expending under these grants are allowable. And the citation is noted for the that states that this is a allowable required procedure. Also, you must have written procedures for cash management. And by cash management, we're talking about the timely requests for reimbursement of expenditures. Are you drawing down your funds monthly? Are you drawing down your funds quarterly? Whatever is your district's written procedures for cash management, that is required to be written in your financial procedures. Also, you must have documented procedures for procurement consistent with federal, state, and local laws and regulations for the acquisition of property and services. And again, the Brustein team spoke about this yesterday. Stephen just touched on it also, but you must have written procedures for procurement and make sure that your procedures do not conflict with your federal, state, or local laws. When we come out to perform an audit, especially a pre-award audit, this is one thing that we will ask for are your written policies and procedures to ensure that you have the necessary and required procedures in accordance with UGG. You must also have written standards of conduct covering conflicts of interest and for governing the actions of its employees engaged in the selection, award, and administration of various contracts. No employee, officer, or agent may participate in the selection, award, or administration of a contract supported by a federal award if he or she has a real or apparent conflict of interest. There are various ways that you can have a conflict of interest that will prevent you from being involved with participation of an award. Some of those conflict of interest exist when an employee, agent, officer, or any member of his or her immediate family, his or her partner, or an organization which employs or is about to employ any of the parties indicate therein has a financial or other interest or a tangible personal benefit from a firm considered for a contract. So you don't want there to appear to be any conflicts of interest, and if you do, you must disclose that potential conflict of interest. You also must disclose in writing in a timely manner all violations of federal criminal law involving any bribery or gratuity violations potentially affecting your federal award. Stephen just talked about the GAPS claims reports. For your GAPS claims or any other reports, an official authorized to legally bind the non-federal entity must certify on annual and final fiscal reports or vouchers requesting payment the following: By signing this report, I certify the best of my knowledge and belief that the report is true, complete, and accurate, and the expenditures, disbursements, and cash receipts are for the purposes and objectives set forth in the terms and conditions of the federal award. And pay attention to what's noted here in red, where it says, I am aware that any false, fictitious, or fraudulent information or the omission of any material fact may subject me to criminal, civil, or administrative penalties for fraud, false statements, false claims, or otherwise. Therefore, when you are signing your name to any of these federal reports, make sure that you understand, you are ascertaining that what you are putting in this report is true and accurate information. Make sure you do your due diligence before you're signing your name on any of these reports. Next, we're going to talk about adequate supporting documentation. The Office of Auditing Services each year updates and posts to our website what we call in-house a guidelines memo, but the name of it is a guidelines for retaining documentation to support expenditure claims. You will also see a link for this document in every assurance document that you sign when you're receiving funds from the Department of Education. Make sure that you are adhering to this guidance in this document, because it will reduce errors, delays, and repeated requests for submission of documentation to fulfill audit requests. So if your district is submitted for an audit and we ask you to submit documentation to us to show how you came up with the amount to be reimbursed on the claim form, we are expecting to see this type information that I'm about to discuss, which is, again, is noted in our guidelines memo. If your claim is for payroll and employee benefits, we expect you to maintain timesheets for your hourly employees, personnel activity reports, and semi-annual certifications for anyone that's charged to federal awards. Now I'm gonna go back to those two. We also expect you to provide us with payroll registers where we can see what employees were paid and what date, what benefits have come out. Labor history reports should be provided to us. A pay stub, salary agreement, a job description, and documentation of the benefit rate for each type of benefit. And again, so I'm gonna go back to the PARs and their semi-annual certifications. If you have any employee that is being charged in whole or in part to any federal cost objective, that employee must maintain and complete either a semi-annual certification or a personnel activity report or a PAR. A semi-annual certification is, like it stated, it is in its name, is something that is completed every 6 months. And this is completed for employees who worked on just one federal cost objective for the 6-month period. So if you worked solely for the Title I program, you will complete a certification statement that says, I, Melissa Myers, certify that from January 1st through June 30th, I worked 100% of my time on the Title I cost objective. That certification statement should be signed by you, and it should also be signed by a supervisor or someone who has firsthand knowledge of the work that you actually did during the 6-month period. Okay, the personnel activity report in turn is a monthly report. The PAR is used for employees who worked on multiple cost objectives during the month. And by multiple, it could be a federal cost objective and a state cost objective. It could be 2 differing federal cost objectives. But if they have a federal, at least one federal cost objective and something else, then that employee should complete the personnel activity report every month. It should document 100% of the activity that the employee spent working on during that month. And make sure that if you have an employee who's working, say 25% maybe on Title I, make sure that they can actually document that 25% of their time truthfully was spent on Title I activities during the month. The personal activity report should also be signed by the employee and the supervisor. And we do have examples of the PAR and the semi-annual certification on our website, and that link that I mentioned earlier for the guidelines memo, if you click on that link, you will see examples. So, is there a question?
Yes, Melissa, there is a question in the chat. So about the pay stub, this person says that the pay stub is attached to the employee's paycheck, just confirming we're responsible for keeping that pay stub from the employee.
Yeah, there should be something in your payroll system that will have the pay stub on it that you should be able to provide to us.
Thank you.
So if your claim is for purchased services, then we expect for you to provide us with contracts. The contracts should include the period of performance of the contract, or various dates that the performance or the services are to be provided. It should be very detailed and describe what services are to be rendered by the person that you are contracting the service with. Contract should also include the contract amount and payment terms. It will be a lump sum payment or a deposit be given up front, and then monthly payments, whatever the payment terms are, that should be included in the contracts. Also, you should have the authorized signatures on the contracts. Whoever is authorized to approve contracts, those signatures should be present. Also, you should have invoices to support any payments that were made under the contract. The invoices should be dated within the period of performance, and also should have timesheets to support the contracts as well. To support supplies claimed on an expenditure report, you should maintain your purchase orders, your purchase requisitions, invoices or receipts to show what was purchased, a goods receipt, and packing slips. So for supplies being reimbursed, we expect to see the items that were just named. If you don't have the adequate supporting documentation, then it is possible that you receive an audit finding, which leads to common audit findings. And by common audit findings, these are findings that our office has noted when we go out to perform your audits. And this is also common audit findings that we see in the annual audit reports that's completed and required to be completed every year by the CPA firms. So we see very often a lack of required documentation to support personnel salary costs. And the Title I program is commonly tested as a major program in the single audits. And we do see this finding quite often for Title I, that the documentation is not being maintained to support personnel salary costs. So again, make sure that you have your employees completing the personnel activity records or the PAR or the semi-annual certification, whichever one is required based on what their cost objectives or the time spent. Make sure that's being completed, because this is still an issue that we see quite often. Also, supporting documentation does not adequately support non-personnel costs submitted for expenditure reimbursement. So sometimes you might have documentation, so you might have claimed $5,000, but your documentation is only showing $3,000 of expenses. So what you're providing to us is not matching what you claimed. We also see issues with unallowable costs. As I stated earlier, your terms and conditions and your program guidelines are going to show you what are allowable costs, and we see sometimes that funds are spent on costs that are not allowable, which means that you have to reimburse us for those costs. Also, failure to adhere to the approved budget. You have a budget that is approved by the program areas here. You should make sure that you adhere to that approved budget. If there's something that was not in your initial budget that you want to spend the money on, then you should do a budget amendment. A budget amendment should be approved before you spend any additional funds on something that was not in your initial budget.
Melissa, before you go on, there's a, well, I think it just got answered. There was a question about packing slips with the supplies requirements and whether or not they needed to keep those. And Herschel just answered though and said, yes, packing slips should be maintained when at all possible.
Yes, thank you.
Thank you.
Okay, other common audit findings. Expenditure reports submitted for reimbursement before expenditures were both incurred and paid, which means that you were claiming expenses in advance. All programs at the SCDE are reimbursements. We do not have advanced programs, which then that means you should not claim any expenditures before they are paid. And we do see that often also. We also see where there is inadequate internal controls over equipment purchased with grant funds. If you are purchasing equipment with federal funds, there are very specific guidelines that you must follow. Assets must be on an inventory list, and we're just finding where those internal controls are not present for equipment purchased with grant funds. I talked earlier about the required written procedures under UGG, and one of the first things that we do when we start an audit is ask for your required written procedures. And we are finding where we don't see a lot of the required language under UGG, or you might have a policy, but it does not have the required language. We also note that expenditures are incurred and paid outside of the period of availability, either prior to the effective date of the grant or after the grant period is ended. Your expenditures should be incurred just within the grant period itself, not prior to your grant period, not after the grant period. Whatever's listed on your GAN is your period of availability. Only spend your funds during the period of availability. The results of audit findings noted, you will be asked to submit a corrective action plan for any findings noted. The repayment of funds will be necessary for any unallowable or unsupported costs. Possible negative press coverage of an audit. Possibly reports in the Federal Awardee Performance and Integrity Information System, which is known as FAPIS. This will possibly show that you have had these audit findings. It's possible that your entity could be suspended or debarred from receiving future federal funds. And based on the severity of the audits, it's possible that you could be turned over to SLED and or the U.S. Department of Education's Inspector General. Okay, so now I'm going to talk about the subrecipient risk assessment process. 2 CFR Part 200-332B, if you may have heard me present before, this citation number was 331. It has been a change because the UGG has been updated and some of the citations have shifted. So now subrecipient risk assessment is in the citation that's listed on the slide. And it states that all pass-through entities must evaluate each subrecipient's risk of noncompliance with federal statutes, regulations, and the terms and conditions of the subaward, which may include consideration of such factors as the subrecipient's prior experience with the same or similar subawards, the results of previous audits, including whether or not the subrecipient received a single audit in accordance with 2 CFR, whether the subrecipient has new personnel or new or substantially changed systems, and the extent and results of federal awarding agency monitoring. For example, if the subrecipient also receives federal awards directly from a federal awarding agency, and we know from the awarding agency how well this non-federal entity managed those grant awards. So at the SCDE, we established a risk assessment process to make sure that we were following 2 CFR Part 200. And with this risk assessment process, each federal program area that awards grant funds to a subrecipient rates each subrecipient on selected criteria. And when I say each federal program, I mean each federal program. Your Title I program is going to rate you, IDEA is going to rate you, 21st Century, all federal programs are going to provide a rating to all of our subrecipients. The SCDE Office of Finance and the Office of Auditing Services also provides ratings on selected criteria for each subrecipient. Ratings from each area are averaged to formulate a total risk score for subrecipients of federal funds. Based on your risk score, you will be identified as being high risk, medium risk, or low risk. And the scale that we use is on the slide. If your score is between 9 and 18, then you will be considered to be low risk. If your risk score is between 19 and 28, you are considered medium risk. If your risk score is 29 or above, then you are considered to be high risk or at risk of non-compliance. Risk scores are used to make federal award grant decisions for discretionary awards and to determine what level of additional state support is required for a subrecipient. So we are actually currently right now in the process of completing our memos to send out to the various school districts so that you will know what your risk score is. The correspondence is going to go to each district's superintendent, your highest ranking school business official, and your federal programs director, notifying you of what the district's overall risk score is. If you are identified as being high risk or at risk of noncompliance, your letter is going to come directly from Molly Spearman's office. If you are high risk, we can and will impose specific sub-award conditions that's allowable under UGG for your federal funds that pass through the SCDE. Some of these sub-award conditions may include requiring you to submit your documentation to us in advance before we actually process a reimbursement claim. You might have additional on-site monitoring visits from the SCDE. Whatever we determine is needed, that's what your sanctions will be if you're determined to be high risk. If you are medium risk, we urge you to review the regulations that's in the UGG and take immediate action to come into compliance. If your entity is noted as medium risk, we will automatically send to you what we call risk assessment details, and it will tell you specifically what your score was for each of our criteria and cite which program areas rated you higher than low risk in that risk details. Again, and high risk entities will also receive it automatically also. If you are low risk and you just want to still have that breakdown of your risk score, we still can provide it to you. Just send me an email after you get your risk score. And if you want the breakdown of your score, we will still send it to you. We just don't send it to the low risk entities automatically. So there are 10 criteria that we look at for when we're rating your risk. Criteria 1 is key personnel turnover. Here we're looking at the experience of your key personnel the stability of your key personnel, or your turnover in key personnel. And when we say key personnel here, we are looking at your chief financial officer and the person that manages your federal program. So the turnover of those two areas is what's being takes a part in rating you for criteria 1, key personnel turnover. The second criteria is required reporting. Required program reporting submitted and the timeliness of submission is factored in when this rating is being provided. Also, we are looking at your GAPS claims also to see, if you're submitting your GAPS claims. Submitting your GAPS claims in a timely manner. The finance officers, each grant accountant is going to give you a rating for GAPS, and the program offices are giving you a rating for the program reportings. For criteria 3, programmatic compliance. Instances of programmatic non-compliance or minimum or significant deficiencies noted. When the program officers go out to do their monitoring visits, they will go back and review the reports from the monitoring visits and evaluate how many instances of programmatic non-compliance that you had and whether there were minimal or significant deficiencies noted. And for each one of these criteria, each individual office is giving you a rating that equates to low risk, medium risk, or high risk in each one of these areas. The fourth criteria is fiscal compliance. And again, this is when the program office comes out to do their monitoring visits, and they're looking at the fiscal compliance, your level of fiscal deficiencies noted during their monitoring visits. Criteria 5 is performance. Performance requirements, expectations, and outcomes met during the time of your grant award. Criteria 6 is the frequency and the need for technical support and assistance. And I always pause here. Yes, we want you to ask questions. This is not saying don't ask us any questions, but when we talk about the frequency and the need for the technical support and assistance, like, are you asking the same question repeatedly and you're just not getting it? Are you we take into account if a person is new? We know that if you're new to a position, you're going to need a higher level of technical assistance. So this is not just asking questions, it's more so the frequency and the actual need. Like, are we kind of giving you intense hand holding is what we mean by technical assistance, not just you asking us a question. Criteria 7 is financial stability. The percentage of general fund unreserved balance to your general fund total expenditures. If your percentage is 10% or less, then you will be rated as low. We kind of mirrored this criteria with the fiscal practices that Stephen mentioned also earlier. And so if you're not meeting that 1 month's test, then you will be considered high risk for your financial stability. Is there a question?
Melissa,
Okay.
there are a few questions in the chat. If you want to, do you want to take those now?
Okay.
Let's see, the first one says, if we have a signature verifying that all merchandise was received that was listed on the approved purchase order, do we still need the packing slip?
We prefer that you have the packing slips, but if you don't have it, then we have to just accept what you do have. But packing slips are preferred.
Okay. Next question. It says, in Edgar, equipment purchased with federal funds and cost less than $5,000 is not considered equipment, correct? We code them as technical supplies.
That's correct, but based on what that equipment is, like if it's a computer or a laptop, that's still an attractive item that still must have some kind of inventory tracking.
Got it. I'm on it now. I got it. I appreciate you thinking about me. I'm gonna call you back because I got.
Okay. And then the next question is, can we receive a list of what reports are considered required reporting?
You have to request that from your individual program areas to see what the required reports are for those specific programs. But for finance, we're talking about just your gaps claims. But for whatever, if Title I has specific reports, then whatever those are the required reports. So just request that for your program, by program.
Thank you so much, Melissa.
Okay, you're welcome. Okay. Criteria 8 is management systems, which is internal control findings or federal award noncompliance findings noted in the annual audit report. If the district has a material weakness, then the district will be cited high risk for that one criteria 8. So we're looking at material weaknesses. We're looking at the number of findings that you had, the severity of findings that you had for criteria 8. Criteria 9 is the audit report submission. This is simply, we're rating you on submitting your audit report in LARS by the established deadline, which normally is December 1st. Due to COVID, it was January 15th, and then single audit report itself was January 29th. But for criteria 9, we're looking at the annual audit report submission if you submit it by the deadline. Criteria 10 is other material factors. With other material factors, we look at the accreditation issues. Do you have any schools, or is your district warned or on probation? That plays a fact. That's a factor in criteria 10. Also, if there are any known cheating and test security violations, that will be rated in criteria 10. And if we have any other known issues, like any significant state program violations or anything else that we just know about that we feel should be noted in the risk assessment, we will note it in criteria 10. So we started this subrecipient risk assessment process in fiscal year 2014-15, and here you just see how many high-risk school districts or LEAs that we had during that time. Beginning in fiscal year 14-15, we had only one high-risk district. The highest number in fiscal year 16-17, we had 5 districts noted as high risk, and with our most recent assessment, 18-19, there were 2 districts. And again, like I said, we are working on sending out the letters now for fiscal year 2019-20. And same slide here for the medium risk LEAs. The highest number we had was fiscal year 2018-19. There were 14 school districts that were noted as medium risk. The smallest number was in 16-17. There were only 7 districts that were medium risk. So just showing you how that number has fluctuated over the years. So are there any other questions on the subrecipient risk assessment before I move on to indirect costs? Okay, if not, now we're going to talk about indirect costs. What are indirect costs? 2 criteria must be met for a cost to be considered an indirect cost. And that is that they are incurred for a common or joint purpose benefiting more than one cost objective, and they are not readily assignable to the cost objective specifically benefited. Some examples of indirect cost functions include accounting, auditing, budgeting, payroll, personnel, and purchasing. Some examples of direct costs include salaries and wages, supplies and materials, other employee fringe benefits for direct labor employees, travel of direct labor employees, equipment for a specific program or grant, and consultant services for a particular program or grant. We calculate 2 types of indirect cost rates here at the department. We calculate an unrestricted rate and a restricted rate. Unrestricted rates are used for programs without the supplement not supplant requirement. Restricted indirect cost rates are used for programs with the supplement not supplant provision. Your ESSER programs are subject to the supplement not supplant requirement, which means that the restricted rate must be charged to this program. If you elected to, you could charge a lower rate, but the maximum rate that you can charge would be what the restricted rate is. And we are soon also will be working on sending out the indirect cost rates for next fiscal year. Hopefully you will get those sometime next month. Do not double dip. And by double dipping, we mean do not charge an expenditure as a direct cost and then claim the same charge as an indirect cost also. So other types of costs that's included in our calculation are excluded costs, which are extraordinary or distorting expenditures that require minimum administrative support. Indirect costs should not be applied to these costs. And direct costs, which are costs incurred specifically for one activity and can be identified specifically with that activity. So in our LEA audit reporting system, or LARS, it is programmed to calculate unrestricted and restricted indirect cost rates. Data used to calculate the rates is received from the supplemental templates that you all submit with the annual audit reports each year. And the expenditures are identified in one of the three categories: excluded, indirect, and direct. So I'm going to talk about just the restricted rate, since that's what your ESSER programs are allowed to use. So excluded costs in the restricted rate include facilities acquisition and construction, food services for food and supplies, and the food service direct purchase services object code under food services. Other charges such as your transfers, your debt service expenditures, equipment expenditures, unused leave, and subawards in excess of $25,000. All these costs are excluded in the restricted rate. In other words, you're not being charged on these costs. Now the indirect costs, you have your numerator and your denominator. Your numerator in your indirect cost calculation includes these accounts: the Board of Education, but only account 231,382 for your audit fees, your fiscal services function, your internal services function, your internal auditing services function, and central support services function. The direct costs in the restricted rate, or your denominator, are your instructional functions, your pupil service functions, instructional staff services, your Board of Education expenses except for audit fees, the superintendent's office, the school administration office, operation and maintenance of plant, pupil transportation, food services, and your head of organizational units that's charged to your X80 series object codes, your community service functions, and your summer school functions. So remember, again, do not double dip. The restricted rate is the maximum rate that is allowed for your ESSER programs. Some resources for you. I mentioned several times the guidelines for retaining documentation to support expenditures. This is the link for that document. And again, it's also embedded in the assurances, terms, and conditions. Our annual audit guide, which is used each year by your auditors to perform your single audits. The link for our annual audit guide is here. Our SCDE Financial Accounting Handbook, which is the chart of accounts for your school districts to use. The link for that document is right here. And also our SCDE indirect cost resources. We have general information listed there, rates for the different school districts by fiscal year also on this page. And then finally, our subrecipient risk assessment process that's noted at this link. Are there any other questions at this time? Okay, so I'm not hearing any.
Yeah, Melissa, I do not see any other questions in the chat.
Okay. And if you do have any other questions later, you can feel free to contact me. My number is 803-734-8453. And my email address is mmyers@ed.sc.gov. Thank you.
Thank you so much, Melissa, for sharing all of that valuable information with us. We appreciate you taking time out of your day to join us. At this time, it is 10:21. We're going to take a 10-minute break and jump right back into our general session. So please join us in 10 minutes. So that time will be 10:31 that we will start again. Thank you.
All right, I have 10:31. So welcome back from the break. We'll go ahead and get started and pick back up where we left off. Again, my name is Sarah Longshore, and I'm the director in the Office of Federal and State Accountability. I've been in this position since July 2019, and it has been my absolute honor and privilege to serve in this role. Joining me today is our assistant director, and this is a new position in the Office of Federal and State Accountability, Jewel Stanley. Prior to assistant director, Jewel was a team leader on the Consolidated Finance and Applications team, formerly known as the Title I team, but she recently received a promotion and is now working right alongside me as our assistant director. And so congratulations to Jewel. I think most of you had heard that news before, but if not, this is her official welcoming to this new position. So thank you, Jewel, for all you've done, especially to make ESSA Academy happen for us over these for these few days. So Jewel and I are going to share with you just some general updates from the Office of Federal and State Accountability. And we'll talk a little bit about how we're organized and how the work of our office is evolving and what implications it might have for you all, or not implications, that sounds very negative, but how our work will benefit you all in the field. So our office underwent a reorganization in 2019, and this work was actually started under the leadership of Roy Staley. And then about halfway through this reorganization is when I entered the office, and we went from having 3 teams to having 4 teams. And so the Office of Federal and State Accountability, as you know, if you've been around for any amount of time, you know that our office has a long-standing tradition and frankly, a proven track record of ensuring compliance. We have always been very, very good at the compliance piece. The next phase of our work has included, maintaining proper attention to compliance. We have also tried to begin creating a culture of continuous improvement. We know how important compliance is. You heard Melissa's caution about all the things that can happen when you're found to not be in compliance, and we certainly want to avoid those situations. So we know that compliance is important, and I don't ever want anyone to think that we're minimizing that. We certainly understand the importance of evaluation, compliance, accountability. All that is very important, but at the same time, we also understand that when we start focusing on continuous improvement, it also allows all of us to think beyond requirements. We know that you can be 100% compliant and still not have the kind of quality program that you would like, or to have the kind of engagement that you need. And so we have really worked hard on trying to align our structure, which is what you see here on the screen, the way we've organized our 4 teams. We've really tried hard to align our structure with what we feel that our purpose is, which is to not only ensure compliance, but to also move us towards quality into engagement. So we're going to walk through each of these 4 teams and just tell you a little bit about the work of each team. I'll start with, let me give you a brief overview though first. The Consolidated Finance and Applications team, prior to 2019, this was called the Title I team, and they were primarily focused on Title I. When we talked about Title II, Title III, IV, V, those were assigned to individual persons in the office. So there wasn't, but what we've done under the reorganization is now the Consolidated Finance and Applications team, each program manager, rather than just focusing on Title I, this program manager is now doing Title I, Title II, Title IV, and Title V. And so that's really helped to build capacity in our office. So each person, each program manager that we have working on this team, they're not limited to just knowing Title I. They know 1, 2, 4, and 5. And then that one person is assigned to a district. So if you are a district and your person is, say, Maria Boggs, then you can go to Maria for questions about 1, 2, 4, or 5, and she's going to know your district hopefully almost as well as you do, because she's read all of your plans and had many conversations with you. The next team that we have is the Diversity, Inclusion, and Access team. Prior to our reorganization, we called it Special Populations. And so it very much is still dealing with what we considered our special populations, but we've really tried to break out of those silos. We understand, so this team works with Title III primarily, or as one of the major programs, Title III. So English learners or multilingual learners, as we're calling them now, and immigrant students. It also has our Title I Part C program, which is migrant education, and then also McKinney-Vento, which is our homeless. And so we understand that our students don't operate in vacuums either. And so if you're a multilingual learner, there's also a good chance you could also be migrant, and if you're an immigrant student, you could also be, McKinney-Vento. And so there's a lot of overlap there. And so this team has worked really hard to work together and to provide wraparound services for students, understanding that they have very complex needs. And then our consolidated oversight and monitoring team, prior to the reorganization, you would have heard this team referred to as state accountability. And this team still does a lot with state accountability. They handle accreditation and district strategic plans and waivers and all sorts of diplomas, transcripts, all of that is still there. But they have also brought in the federal monitoring piece. So they do consolidated monitoring of both state and federal programs. And then what we added after the reorganization was our innovation and support team. So this is a brand new team. It was a new concept, and we've come a long way with it, but we're still building it as we go. But really the purpose of this team is to provide support for innovation, and to help us really think about how we move the needle for students. So we want to be compliant, yes, but again, we know we can't stop there. And so this team, Joel will talk a little bit more about the work of the innovation and support team, but it is a new team and we're very excited to add this to our overall picture here. So at this time, I'm going to turn it over to Jewel to talk a little bit about the Consolidated Finance and Applications team. Just a few short weeks ago, she was the team leader, but now, again, she has moved into that assistant director role, but she can speak very knowledgeably about what's going on there. So, Jewel.
Thank you, Sarah. As Sarah stated, I was the team lead for a while with the Consolidated Finance and Applications team. I am happy to announce that we have a brand new team lead, and that's Jennifer Rhodes. She started in this position just last Wednesday, and so we're congratulating Jennifer with her new promotion as team lead for Consolidated Finance and Applications team. She's been in our office since, I believe, 2016. Many of you have gotten to know her as your program manager. She's worked very closely with the finance piece and uploading allocations. So she's been your go-to person in that regard. So congratulations, Jennifer, and we're looking forward to all the wonderful things that are going to happen within the Consolidated Finance and Applications team. As Sarah stated, this team is responsible for Titles 1, 2, 4, and 5. We used to also be responsible for ATSI and CSI applications. We are transitioning those applications, the management of ATSI and CSI, to the Office of School Transformation. So as you look to receive information about ATSI or CSI, that will come from a different office. We recognize that sometimes it may have been confusing getting some information from maybe our office and some information from the Office of School Transformation. All of the information that you will receive from this point forward will come from that office. And if you have any questions regarding where that application process is at the moment, I urge you to reach out to Kim Mack or Donna Manning in the Office of School Transformation. But I can tell you at this point, they have determined what the allocations are for the schools and the districts regarding those two grants, and the amounts have been loaded in GEMS. I believe that that office has paused the process for you to complete the applications at this moment. I believe they're going to start that cycle up for you maybe next week. They have some more communication that needs to be shared with you before they allow the applications to return to the live status. So just keep that in mind, that if you were working on the applications and you tried to submit, that's the reason why you're not able to submit at this time. Or if you were just getting into the application and noticed that you couldn't do anything with it, that's the reason. So no need to panic. They're going to work with you to make sure that you can submit those applications very soon. And while we're talking about applications, our team, I'm still saying our, I still feel very much a part of the finance and applications team, but the goal was to increase the speed of application approvals. And so our first goal was to have 90% of all of our Title I initial applications approved by November 24th, and 90% of Title II and Title IV approved by December 31st. Well, we did a little better than that. We actually completed 96% of Title I applications by November 17th, and we had 95 and 94% application approval completion for Titles II and Titles IV. So I just want to take a moment to thank every member on the Consolidated Finance and Applications team for working so hard to get those approvals in quickly. So thank you to the team for all of your hard work. Just a few reminders for you as we continue. You have 2 grants that are open right now that will close September 30th, and that's your FY19 and FY20 grants. We know that this is a little different than what we normally have. We always have 2 applications open, but this time we have 3. And so you're trying to juggle quite a bit right now when it comes to those applications. And so what we want to do is make sure that we remind you as we are meeting today, and anytime you probably hear from someone from the Office of Federal and State Accountability, we're going to remind you to make those quarterly claims. If you need to make them more frequently than quarterly, please do so. Actually, we will urge you to do more frequent claims so you'll know where you stand with that funding. So make sure that you are tracking your money well, because we do not want to leave any money on the table. We never want to give the U.S. Department of Education any funds back. So please make sure that you are doing all that you can to spend the funds that you have. I have heard many districts are now considering creating a robust summer program to try to expend those funds. So there's a hint to you, as well as if you were trying to figure out what are you going to do with the funding that you have left. Also want to make sure that I do another reminder about GANs. Please make sure that you have your GANs on file with our office. That's especially important for our FY21 grants and our soon to be released later this summer FY22 grants, because if we do not have a GAN on file for your particular grant, that impedes the progress that you're making on spending funds, because we won't approve your budget in GAPS. We hold the GAPS budgets until we have that contract on file. So just keep that in mind. We also have preliminary Title I and Title II allocations that were given to the state. We are not ready to release that information to you today. It is our hope that in the next week, we will be able to provide you with both your Title I and Title II preliminary allocations. Sheree Mosley in our office is working diligently to get that, get all of the math correct and make sure that we're giving out proper allocations to each district. So hopefully within the next week or so, you will see that information come to your email. And then the last reminder that I have for you as far as the Consolidated Finance and Applications team is that if you are having any new schools added in this upcoming school year, or you are perhaps having some schools come offline, please put in a help ticket in GEMS and alert the programmers that you have new schools coming on board or going offline, so that your new application, your FY22 applications for Title I especially, will reflect those changes. So that's all of the reminders and announcements that I have for the Consolidated Finance and Applications team. Sarah, I'll turn it back over to you.
Okay, thank you, Jewel. And so I'm going to share a little bit about the Consolidated Oversight and Monitoring team now. The team leader for the Consolidated Oversight and Monitoring team is Karen Cook. And many of you remember Karen when she served on the Title I, formerly the Title I team. She was a program manager, and she also did an awful lot with Title II for us. But she is now leading our efforts over on what we call our COM team. A big part of what this team works on is the Consolidated Federal Programs Monitoring. So they are doing, or the goal is eventually for them to do all of the monitoring for the federal programs that are administered through our office. So all the title programs, and eventually being able to loop in McKinney-Vento and Migrant and all of those as well. But they also do a lot on the state side. They do work with accreditation, district strategic and school renewal plans. We don't decide what goes into the activity coding manual, but we do help create the numbers and publish that manual. And then we also do a lot of work with waivers. And so I know right now there's a lot of questions going around about virtual programs and the need for waivers. We're also able to help answer those questions as well. So I'm going to share I'm going to share a few updates, particularly relating to accreditation and district strategic and school renewal plans, even though that's not necessarily a big part of what we would think would be the ESSA Academy. I know that many of you also work on some of these stateside initiatives as well. So we're just going to share a couple of quick updates with you while we have your attention. So first we wanted to share the 2021-22 federal programs monitoring schedule. These are the districts that have been selected. Congratulations, you're on the list for this upcoming school year. And so you will receive more information, of course, exactly which programs will be looked at and what that schedule would look like. So for the current school year, for what we are doing currently, we have the Consolidated Oversight Monitoring team has really been focusing on Title I, Title II, and Title IV. Our hope for next school year is to be able to work in Title III, Title V, and NND. And so what this allows us to do, there was a really great session that Greg King did yesterday on consolidated monitoring. And so if you missed that, I encourage you to go back and watch his video when it gets posted, but really talked about some of the advantages for doing consolidated monitoring. This reduces the amount of time or the number of instances that our office comes out to your school or does a remote monitoring. But rather than coming out and doing Title I and then a couple months later coming out and doing Title II and then coming out later and doing Title IV, we can kind of roll it all into one and look at everything at one time. And so it is kind of a heavy load to carry. And some people are like, oh, that's a lot to do at one time. But the advantage is you get us out of your hair, right? You won't see us again for another 3 to 5 years. So there are some real advantages to going this route. So in the upcoming school year, in 2021-22, we're going to be using a new consolidated federal programs monitoring tool that we created over this last year. This is a tool that we worked with all the program managers in our office to create. It was reviewed by our senior staff and general counsel. Our committee of practitioners looked at it and provided feedback, and we also had it vetted and edited by Tiffany at Burstina Manasevit. So this is a new tool that we will be using moving forward. If you need a copy of this tool or would like to have it sent to you again, please reach out to Greg King and he will be happy to share that with you. We had planned on, or our approach has been to kind of, especially during the COVID pandemic, doing a week of approach. So not necessarily specifying a specific day that we would be reviewing a program or would be out at the district, but sort of, okay, it will be over the course of this week. Well, based on a survey, based on the results of a survey that we sent out not too long ago, we may have to go back and rethink that. And so, it seemed that there was a strong appetite for us to just pick a day and do it in one day. So we thank you for your feedback, and we are looking at those responses very carefully, and we'll put together a schedule that hopefully will meet your needs the best we can possibly make that happen for you. That schedule will be published in August. So we'll be working on it throughout the summer, and it will be published then, and then monitoring will begin in October, and we hope to have it completed by April of the following year, 2022. So again, this isn't necessarily federal programs, what you would think would be in an ESSA Academy, but I just wanted to update you very quickly on a couple of stateside issues. One of them is accreditation. The accreditation report and our state compliance monitoring, we were able to waive that during the current school year because of Molly's magic wand. She was giving the ability to waive certain regulations because of the pandemic. And one of the things that she allowed us to just hit pause on was the state compliance monitoring piece and was the accreditation. And so we didn't do any of that during the current school year. But as far as we know, it's going to be business as usual for the 2021-22 school year. So whatever would have happened in 2019, we expect to see again in 2021. District strategic and school renewal plans, again, because of the pandemic, in 2020, districts were given the option. Some districts were already ready to submit their district strategic and school renewal plans, and so they did, and we accepted them and provided feedback on them. But then districts were also given the opportunity to defer until 2021. And so it was a nice mix kind of down the middle. We had some districts who took advantage of that flexibility and some who didn't. But there is no waiver this year. So unless there are any changes made in the current legislative session, which we don't anticipate, plans are going to be due April 30th as usual. If your district is a little unsure of where it is in the 5-year cycle, and it is easy to get those confused, especially when you skip a year. And if you have any questions at all about what is due, please reach out to Karen Cook, and she'll be very happy to set that straight for you. All right, Jill, I'm going to turn it back over to you.
Thank you, Sarah. So with the innovation and support team, many of you may not have heard, but we have a new team lead in this team as well. Evelyn Towns retired recently, and Basil Harris is our new team lead for the office's innovation and support team. Now, he served in various capacities within the agency for numerous years, and we are happy that he is the new team lead, and he has some wonderful ideas and a great team, and we're looking forward to all of the great things that the innovation and support team will be implementing in the future. So just to let you know that the innovation and support team will support districts and schools by collaborating with district leaders and instructional personnel to determine the level of evidence for interventions that may have a positive effect on student achievement, starting with a comprehensive needs assessment and a focus on data-driven identified priorities. So in order to do that, the team will provide, broker, or facilitate professional learning opportunities, technical assistance, and resources that may include things such as developing the district-wide needs assessment. That includes identifying root causes, interpreting and effectively using data to inform sustained improvements, or implementing evidence-based interventions. In addition, the team will work hand in hand with other teams in our office. One good example of that would be after the consolidated oversight and monitoring team has determined that a district has findings, this team will be able to provide that district with some support through coaching and technical assistance. Of course, the innovation and support team has developed a web portal that will provide districts and school staff with tools and resources to assist them from moving from just compliance to engagement. There are evidence-based resources that are included in this portal, and it's been vetted by the innovation and support team. So if you haven't had an opportunity to see Basil Harris's and Lynn Hammond's presentation yesterday, I would encourage you to review it when the recording becomes available to you, so you can have a sneak peek at that portal before it goes live. And of course, this team is going to be collaborating with the Office of School Transformation to support their work. This will be a great bridge to assist those districts that have ATSI and CSI schools that need some additional supports, as well as some schools that might be on the bubble. So we look forward to seeing all of the wonderful work that's coming from this newly formed team. Sarah, I'll turn it back to you.
All right. Thank you so much. And so the last team that we're going to highlight this morning is our Diversity, Inclusion, and Access team. And we affectionately call this team Team DIA. And again, prior to our reorganization, you would have known them as our Special Populations team. The team is currently led by Zach Taylor. He also serves as our Title I Part C Migrant Coordinator. And so a couple of updates about the Title I Part C, or migrant program. A couple of things he wanted me to make sure that I shared. First, we have regional staff available across the state. We have 6 migrant recruiters and liaisons positioned in different areas of the state, and they are available to assist you with supporting identification of students, providing services, connecting families with resources that they might need. They are truly there just as a support. And so if you have any questions or feel that you need some support as it relates to migrant students and families, please reach out to Zach, and he can connect you with an appropriate person in your area who can come out and assist in whatever way is needed. He also wanted me to share that eligible migratory student lists are now uploaded into the District Technology Coordinator ADT folder. You should know what this is, or be able to, or have somebody who's able to access it. But if there are any questions or concerns there, we have James Cornelius now, who is on our staff, and he's our MEP, Migrant Education Program, our MEP data specialist, and he will be able to assist you with any questions that you have. And so his email is there for you as well. So any questions about migrant students, please reach out to Zach, and he'll connect you with the appropriate staff person. For Title III, this is another major program on Team DIA. We want you to save the date, July 20th through 22nd. Last year, we hosted our first English language learner or English learner acquisition kickoff. And it was a huge success. It was, we had to very quickly at the last minute shift from being in person to being virtual, but we still had over 700 participants across the state participate in this event. It was wildly successful, and so we're planning to do it again. It's going to be bigger and better. So July 20th through 22nd, please mark your calendars for that. We'll be sending out more information. I know it will go directly to whoever's listed as your Title III coordinator, but it's not limited to Title III coordinators. Your ESOL teachers, principals, assistant superintendents, anybody that has an interest in our multilingual learners in that program is invited to attend. Title III, they have been working on a new monitoring tool and really trying to develop a tool that is not just checking the compliance, but one that really helps to provide valuable feedback to the district so that we can move the needle for students. So really looking at providing opportunities for stakeholder engagement, coaching, technical assistance, and all that's really worked into it. So they're doing a pilot this spring, and they've selected 6 LEAs to help them with this effort to just try it out and to work out any kinks. And so Beaufort, Fort Mill, Lawrence 56, Horry, Jasper, Marion, thank you so much for participating. So they're really working on fleshing out the Title III monitoring. And as I mentioned earlier, our hope is that eventually Title III will move over to Karen Cook's team, the Consolidated Oversight and Monitoring team, and Title III will be included with the monitoring over there. McKinney-Vento is the last program on Team DIA, and they are hosting currently monthly virtual cafes and offering lots of professional learning opportunities for McKinney-Vento liaisons. And so if you have anybody in your district who is not currently involved and would like to be, please reach out to Burley Wright. Her email address is there. She works very closely with Linda Maribel Pace, who I know you all are familiar with, and we'd love to share these opportunities with you. Great information that they're sharing. And then finally, something else that Team DIA has really been working together on. We've realized that identification of these students is sometimes the most difficult and yet the most important part of the entire process of providing support to these students. Sometimes connecting them with the proper resources and supports and services, that can tend to be a little bit more cut and dry, but just identifying them on the front end it's complicated sometimes. And so they have really been working hard on how can we help districts be able to provide proper identification when they are first enrolling or first entering a school. So that's the first step in being able to provide equitable access to educational opportunities and to closing any achievement and opportunity gaps that may persist. The first step in all of that is identification. And so Team DIA has been meeting with a stakeholder group that includes folks from Title III, it includes migrant coordinators, McKinney-Vento liaisons, and then our Power School folks. And they have been meeting with them to develop a consolidated identification screener that schools will be able to use at registration. And so, it's not ready to roll out yet. I think the earliest that we would ask any districts to begin using this new tool would be in the fall. So you would get plenty of notice prior to that rolling out. But what it would do is it would essentially replace the home language survey that you're currently using. And rather than just identifying multilingual learners, it could be used to also identify if they might be homeless or if they might be migrant as well. And so that's just some exciting work on the horizon for you to look forward to, and we'll be in communication about that in the coming weeks and months. All right, Jewel.
Okay, so we want to just do a quick reminder about the district and entity information management application, which is in Member Center. Your district web access coordinator can provide access and maintains and updates this information. And basically, this is our database that provides us with all of our contact information that we need from districts. If you've ever said, oh, I didn't receive that email regarding Title I that everyone else said that they received, and the reason for that may be that your district has not updated your information in DIEM, and so your information would not have reached you because it may have gone to the former person in that role. So please make a point to make sure that your web access coordinator or the person responsible for keeping all of the contact information updated for your district has your name associated with whatever program you're running. Some of you are running multiple programs. So if you're there for Title I but not Title IV, and you maintain the grant for Title IV as well, you need to make sure that that list is accurate. When we sent out the registration information for this ESSA Academy, that's how I pulled all of the information. So if you received information about registering for ESSA Academy from someone else and it didn't come directly from me, it may be because you're not in that system. So please, if you have a moment, reach out to your WAC and make sure that your information is properly updated.
There was a question in the chat, Jewel. She asked, "Are we able to have view only to DMs?" And then somebody else agreed and said it would be very helpful to have view only access. I will double check on that, but I don't believe that there is a way for districts to view that information. Is it, Joel, do you know if that's correct?
I am uncertain, Sarah. That is a good question that we need to follow up on.
Yeah, we'll check on that. I don't believe that there is a way for districts to view it. I believe that that's just the internal information database that we use here at the SCDE. The next question is, who can we contact at the SCDE if our district's contact info is already updated in DM, but we continue to receive emails in our old domain as well?
That's a good question, and it could be that other offices are using maybe an old list that they had, but I can tell you that the Office of Federal and State Accountability is definitely pulling from the list in DM to make sure that we have the most up-to-date information for the district. I'm not sure who we need to contact. We need to find out, Jennifer, who you're receiving those emails from. Maybe we can do a little digging to see which list they're pulling their information from. But everyone here in the agency at this point should be using DM. Okay, I have one other thing to announce. The federal timeline that we have normally sent out to districts is now updated, and our technology is not working the way that I thought it would, where I could just slide this this link into our chat. So what I will do is send this document to everyone today who's registered for ESSA Academy, so you can see all of the revised information that goes along with all of our grants that the Office of Federal and State Accountability run. So this timeline should give you, a guide, some reminders of activities that you need to make sure that you're doing throughout the grant cycle. So be on the lookout for this to arrive in your inbox today. And of course, if you have any questions for us, certainly we're going to stay on for just a minute for any questions you have. But if questions should pop up after this presentation, certainly reach out to Sarah or to me, and we will certainly try our best to help you navigate whatever issue you may be having. So are there any other questions? We're going to end quite early, give you about 50 minutes of your time back. So please let us know if you have any questions before we close out.
Yeah, most people are not too upset when they get time added back to their day. So, but do make sure that you come back at 1 o'clock. We have got some really great breakout sessions that are being offered this afternoon. All right, we've got
Okay.
some questions popping in. Can you show
Yes.
the slide for who is on the monitoring list for this year? There we go. And then let's see, can you address how to receive approval to consolidate administrative funds?
Okay, so the approval for consolidating administrative funds, obviously it comes through our office, Phyllis, and if you will reach out to me, I will walk you through that process.
And I just got a little bit more clarification on the DM's question. There, of course, there is a district level person appointed to keep DMs up to date, your WAC. So you are encouraged to reach out to that person to find out who that is, and they can also confirm that the point of contact they have has been assigned to the proper roles. And again, as Jewel said, if you are receiving emails when you should not be, feel free to reach out to us and we can help connect the dots. We can help you figure out who's not using DM in the agency and get them on board. We do use it religiously though, and it works very well for us. As long as the contact information is up to date on the district side, it's very easy for us to ensure that our communications are reaching the right people. Let's see what else. Last memo, ATSI, was dated on February 22nd, but was sent on Friday, March 19th. Dr. McDavid, I wish I could say more about that memo. I'm not sure though, because it did not come out of our office. We have been working very closely with the Office of School Transformation. We understand that this is, it's a transitional period, and so we've been really working with them to train them and to shift the responsibility of ATSI and CSI over to the Office of School Transformation. So, but it is a process, so we appreciate your patience and understanding with that. Yeah, we've lost a month of completion time. Any concerns about ATSI and CSI? I encourage you to reach out directly to Kim Mack, the director in the Office of School Transformation, or Donna Manning. And certainly, I know we'll all do the best we can to answer or address any concerns that you might have. Do you mind going to your next slide, number 11? I want to ensure I don't miss something.
And
It's
while
a slide.
Okay, you got that slide. There's another question. Will ATSI and CSI still receive approval in GEMS from Title I program office, or only the Office of School Transformation? Well, we are transitioning all of the approval over to the Office of School Transformation, but for the first iteration, when the first review, the Title I team will look at those grants to make sure that it meets the Title I allowability requirement, but the Office of School Transformation will be taking over that role with any amendments submitted for those applications. This will be our last look at ATSI and CSI.
And what you said, Joel, is absolutely correct, but actually only for this year. As this is our transition year, and again, we do thank you for your patience and your understanding. It's difficult moving an entire program from one office to another, but we're working it out and working great together. Our offices are doing the best we can with that. But starting next year, the Office of School Transformation will do all of that. So whereas we have had that first level review and continue to this year, looking at, are these activities allowable? And then sending it over to the Office of School Transformation. Next year, we will not be providing a first level review. The Office of Federal and State Accountability will be really almost completely out of the ATSI and CSI workflow. Will those go to multiple departments? Yes. So when a school has been identified based on a particular subgroup, whether that's our multilingual learners or special education, then yes, they will get a review as well from the appropriate program office. The timeline for approval and activating strategies. Yes, I certainly understand your concerns. Maybe we can connect after this meeting and we'll talk through. Any other questions that we can answer for you? Sure, and thanks, Dr. McDavid. I'll give you a call after this. All right. Well, Joel and I will hang back in case anybody else. Can you share the screenshot about the ESOL workshop? This one, the Multilingual Education Kickoff, July 20th through 22nd. So Joel and I will hang back. We'll continue to answer questions. But for the rest of you, thank you again so much for attending. I hope that this information was helpful to you. Hope you'll be back for the breakout sessions this afternoon, and we have another great presentation planned for you tomorrow morning. Thank you again for your time and attention, and have a great lunch.